Hello there, this is Nirav, and in this session I'll be doing Elliott Wave Analysis of gold and looking at possible direction and price target for the same. So in the last discussion that I posted as an article on TradingView, I was of the view that this level of 1250 till the region of 1253 should act as a resistance and market can move down from here on. However, if the market takes this level as support, that the market moves above and takes this as support, then it should definitely test the 1260 high. So as of now the market has moved above this region and basically even tested the 1260 high. So we would be looking at the possibilities and possible wave structures in which this market will proceed from here on. If we look at the bigger picture over here, then it is very much clear that we have a 5 leg up move or an impulsive move starting from this point at 1194, and after this leg up or this 5-way move up, we were bound to have a correction. So let me describe the position that we are in right now in a rough region. Basically what happens after a 5 leg move up like this is that we have a 3 leg correction, and that 3 leg correction could be a simple zigzag like this, which would mean that the second leg ended over here. If that is the case, then in this gold chart the second leg would have ended over here as a double zigzag, and if the second leg has ended over here, then we will have a third leg starting, and the third leg would have the first leg which will face resistance somewhere near the previous high, and then it will correct for 3 legs down and then move up for the third of the third. So this could be the situation 1 or the count 1. The second situation can be that after a 5 leg move up, the correction could be a little bit more complex. Okay, so it could be like a flat type of correction in which we have ABC followed by another ABC followed by a 1 2 3 4 5. So if that is the case, then this is just the A leg of the correction. This would be the B leg and should be followed down by a C leg. So one thing that is pretty much clear over here is that if this count 2 plays out, then we are going to see a correction up till at least this low of wave A. However, if this count 1 plays out, then we are going to see a correction at least around the 50-60 mark of this wave. Okay, so basically what I'm saying is that no matter which of these counts play out, the higher probability or the chances of this market from this point on are to give a correction, and that correction should at least go till the 50-60 mark. And how that correction goes till the 50-60 mark, like the wave structure of that, can help us to decide if it's going to go even lower as a C leg or if it's going to go higher as the third of the third. In both cases, our strategy should be to look for shorting this market from an intraday perspective, that is to sell on highs up till at least this region. And once the market reaches this region, if things are simplified or clarified by the market, then we can look at various different strategies. So let's look at the actual chart now. So basically I have counted this correction as a double zigzag, ABC followed by a connecting wave X followed by ABC, and this wave up can be counted in 2 waves. It can be counted as 1 2 3 4 and 5. So if that is the right count, in that case it would be followed by a ABC for 3 legs down, and then it would be followed by 1 2 3 4 5 for the third of the third. So that would be the count 1 that we just discussed roughly, and the count 2 would be that this is some kind of A, B, C type of correction, and it should be followed by 1, 2, 3, 4, 5, that is 5 legs down, and after that we'll start the third, okay, from here on. Of course we can look at the targets. If it's an A, B, C kind of flat correction, the targets would come around at 100%, that would be here, and 161.8 and 138.2%. Let's just actually look at them. Starting from the starting point of wave A till the ending point of wave A, projecting it from the starting point of wave C. So we are having the targets coming around, obviously the 100% mark, 123.6, 138.2 would be somewhere over there, and 161.8. basically 100 and 161.8 are the important ones. So it would be like 1226 and 1240 if this market decides to go down as a C leg. However, if this market is coming down as not as a C leg but as a correction for 3 legs down of this impulse, that is if this wave movement is an impulse, then we will be expecting targets only around this region of 1250 till 1247. So basically just take short positions in this region. That would be the main strategy, and hopefully till the market reaches this region we will get enough clues that how will this market proceed, and then we can decide how to trade it even further. So that was just another quick short update from my end, and for those who want to learn more, I have a video course on Elliott Waves. You can find the link for that in the description. Also, I'm an affiliate with TradingView. You can find the link for that as well in the description if you want to support my work, and definitely share it so that I get more views and more motivation to make such videos. That was all for this discussion, and see you in the next one.